Good evening. This is Ken Long at Tortoise Capital with the daily debriefing for the Advanced Swing course, January 4th, 2018. So just a few things to look at off the daily market health check. We closed yesterday with two strong upward moves that made new highs. We had the baby dragon leaving the dragon riding the edge of the river. The slope of the 30-period regression line, the moving regression line, still in a favorable position for continued swing trading. The jaws of PPO had opened to the upside above the zero line, so that was favorable for swing trading. We were overbought, but we can remain overbought for long periods of time in these kinds of grinding bulls. The range expansion from the Z3P area. We're into at least the third leg up, so everything was favorable. Today we had a gap up in SPY and closed strongly, so a favorable condition. ADX on SPY is at 30 with the bulls clearly in charge, so that's not an overblown number yet. It's a strong bull, but it's not outrageously so. So still more room to go in this grinding bull, much to the dismay of professionals everywhere. So let's take a look at a number of intraday implementations of the Turbo and Core swing trading program. We had isolated on Merck as a favorable pullback opportunity. The mechanical entry would have been available right here at the open around 56.50. Typically, what I will do on gaps up, wait 30 minutes, identify that opening 30-minute range. We get a 1, 2, 3 pattern here. We're above the zero line. We get a MACD histogram uptick above the zero line. That's also a hybrid frog move off the low of the day. And the rest of the market looking good. So our entry is around 56.50 with maybe a 15-cent initial risk. Get a nice move in our direction. Could have added a second position here, elected not to. On the second leg up with the MACD histogram rollover, this looked like a natural place to cash 70 cents per share on an initial risk of, let's call it 20 cents. So this is anywhere from 2 to 3 hours of execution, depending on your chosen stop. We get a MACD histogram uptick shortly thereafter, but it rolls over. We take a money managed exit for a fractional loss. I'm not short this yet because we're still above the zero line. It finds some support above this resistance level, and we buy the crossing of the MACD histogram signal line above the dotted line once more, and so we were long at around 57.10-ish. Later on, exited this for a scratch. But that's getting well started in MRK. It remains on the swing trade list because of that positive follow-through. This is one that we've been working for a number of days in treasuries. We identified a tremendous, this was like a 10-to-1 reward to risk ratio back in here, and we have been playing this on swings long all the way through the last 10 days. I'm sorry, this was the 10-to-1 here, and we've been playing this long over the last 10 days or so. We got a 1, 2, 3 entry was available here from when the signal line re-entered the Bollinger Band 2R floodplain, also available in here. A routine entry here when the signal line crosses the zero line, and then it starts closing this gap. And on 2-hour charts, this is a nice exit in here when it has rolled over and re-entered the river. And this is also a money management exit here. So you end up getting long at around 125, cashing at around 120, looks like about 126 even on a 2 or 3 day trade. And then a re-entry long here when we get the MACD histogram uptick above the zero line. This one is from DIA this morning. Now, the Dow 30 has been the strongest of all the indices, and so on a sign of any strength at all, you can re-enter that one because the U.S. large caps, conservative large caps, have been doing well. You can see here the signal line re-enters or crosses back above the 5-period moving average. You get a gap up, sell off, and then a rapid re-entry. Take a new high of the day, can enter here. This is a entry around 250.10. An orderly exit here when the signal line crosses back at the zero line for 250.62. So that's about a 50-cent move. That's 50 index points. That's $250 a contract after costs on the Dow Mini. Because it was so long and strong, wait for the next pullback opportunity. You get a recross above the zero line at the MACD histogram here, and this closed well for another gain in DIA. Procter & Gamble hit a number of our mechanical signals and the auto framer yesterday. Again, that 30-minute magic right in here. This accelerates a little bit more quickly, although you could get long in here. But this was a hybrid frog off the low of the day. Enter. Should have exited here on this cross for money management. Got the next surge up when it doesn't make a new high and starts rolling over, and now the signal line leaves the river. That's time to cash. Re-entry, long grind. This was ended up being a money management exit out in here for another maybe 1.5 R. So those were all swing trades that the turbo opportunity was there when it moved in our direction. Because an intraday risk in terms of dollars per share is lower, your position size can be larger on the same dollars at risk, and then you can cash pieces of that, and typically I'll cash 80% of the turbo position in order to fund the overnight risk for these patterns that are available as swing trades. So let's shift now to the daily report. Look for some. So we're back at the daily now for January 4th. We're going to take a look at the first half a dozen pages or so of the primary signal generators. Still bullish normal, oversold, oversold. The stretch above the 200-day moving average and the slope of the 50 are both green bullish. That's very good. The risk Z continued to improve. That's risk on and favorable for swing trading. We're still overbought. No signals and channeling, no overreaction on the primary ETFs. The max pains, Intel because of the chip problem. Travelers, AT&T, Nike, and Verizon. Verizon's going to appear a lot along with Travelers. Travelers and Intel on channeling and overreaction. Triple screen and 551Ws for XLP. It remains on the radar screen. Verizon also triple screen and 551W. Johnson & Johnson and Procter & Gamble continues to work. I will favor Procter & Gamble because we've already invested some time and effort into that, and we're already into the favorable swing trade. In the auto framer, just 4 candidates. Win, the VIX, utilities have been getting smashed, and Intel. Dow Tactical summary, only Intel on an RSI 2 of 10 or less. You can see it's been getting smacked compared to its Dow 30 peer group. The real strength has been in IBM and Caterpillar, and then also General Electric. So that's been a real favorable story. Look, at it was negative over the longer periods, but has made a rapid turnaround. That's sort of the buy quality on sale approach when you have excessive losses longer term and you see short-term pullbacks or retracements. Those are fire sales of something that everybody has to own, and that's why we like to play for that particular pattern. Caterpillar remains really powerful in every time frame. ETF 30 tactical, see the weakness in the VIX. Lots of strength down here in the metals and mining. XME resumed its upward pull. I would look for more strength out of those and reward that immediately. Brazil continued to do well. And looking for some fractional gains in Mexico. So the Mexico, Brazil, Latin America story is still continuing to improve. We're earlier in the life cycle of that than we are in some of these other sectors. Most positive Z stretches, these are the ones that have had the most explosive move away from their 30-period Bollinger Band mean. And this is measured on a percentage basis, but then sorted by the Z-score compared to its long-term performance. So energy, ExxonMobil, metals and mining, basic materials, technology, Chevron, Caterpillar remain in the plan there. I include the three broad U.S. indices here for large and small caps. So the S&P, Russell 2000 and Diamonds, just so you get a sense of where the market is compared to individual performers. Most negative Z stretches, utilities, and real estate. Now just notice the importance of the Z-score. A minus 6% below the Bollinger Band mean is almost a 3 sigma adverse move for the utilities, whereas a 12% location below its 30-day Bollinger Band is only minus 0.6 standard deviation, so just a real sense of the difference in volatility between those two instruments. The expanded pinch boxes, these are the ones that have had a sustained directional move for 30 days compared to their long-term 30-day performances. And the size of the directional move, or the width of the river then, you see in utilities is 3.5 sigma wide. Caterpillar, extraordinary move. That's been an amazing swing trade. Just tagging along for the ride on that one. Let it keep going. Notice the expanded box in the Dow is now over 1 sigma, so that's really how strong that directional move in the diamonds have been, but it's only 2.43% above its Bollinger Band mean, so there's still more room for that to go. That's the trade, I believe, and the components of the Dow should be on your short list for exploitation. The most compressed pinch boxes, these are where the Z3 lines have pinched to extremely narrow cases. Those highlighted in red are where it's more than 1 standard deviation tighter than average. So Apple, Coke, and Walmart on the list there, poised for breakouts. We'll take a look at those trade frames for the swing trade players. So we're just identifying some candidates right now. And then the super pinch candidates, I expanded the look. Only Apple among the Dow 30 and the ETF 30 was a super pinch. So when we expand, we get a few more symbols that are in that super pinch condition. And that's where the Z-score of the width of the river is extremely compressed, and all the regression lines are within a tight band. So we have a combination of lack of volatility, sideways movement, and consensus from all the different time frames on what fair value is, as measured by the regression lines. And that makes it poised for sharp breakouts in either direction. The auto framer stats for those that test out mechanically on a retest of the 10-day high, and just using yesterday's risk or yesterday's range as a risk. That's how you get this reward to risk ratio. This tells you the size of the range risk, or a 1 ATR risk, and that highlighted risk is what's used to compute the reward to risk ratio. On the regression line fractal framework, those in the top shelf in the green are the symbols that are most below their own RL270. So these are deeply discounted quality value on sale. So General Electric should certainly be on our short list. McDonald's, Johnson & Johnson, Coke, and Merck. Now, how do you not feel safe framing and trading those? I mean, if anything's going to work in the long run, Merck and Johnson & Johnson to take care of the poor health that you get by imbibing Coke and eating McDonald's, with GE to finance it. And then the symbols in the red on the bottom shelf, these are the ones that are the most ATRs above their long-term fair value, which we use as the RL270. So it's IBM, Chevron, ExxonMobil, Home Depot, and CAT. Those are the front runners. That's where the relative strength is. So I look at that as trade frames of two different possibilities. These are all above or below their fair value to such a degree that a larger than normal follow through is what I expect to see. I just don't know the direction. This outperformance could continue to outperform, or it may start reverting back to the long-term mean. And the same thing down here. The underperformance below its fair value, it could be what attracts deep discount or value traders, and that could start to cause it to outperform, or it might continue to drift down based on whatever it was that caused it to lose that much. So from extreme conditions come extreme performances, and that's the essential idea behind the regression line fractal framework. You see the free and clear, 3 days up, free and clear. The only concern I have is the doji and the fact that the stretch was almost 2 sigma, although this grinding bull could continue for long term. And now notice the improvement in the RL30. If it crosses back above its 10-period moving average, that is very favorable. So this is all poised for some outstanding moves. The only thing that I see on the horizon that could jeopardize that short term are more damaging news about the chip malfunctions from Intel, or more political shenanigans coming out of Michael Wolff's book. So there's always some news events. And when the market has had this long of a good run, I'm very prepared to protect my long-term swing positions with intraday VIX trading, where I can maintain the long positions but take advantage of sharp adverse volatility moves. And VXX and UVXY are perfect for that because of the volatility and leverage available. So that's everything I want to cover today. We're about 16 or 17 minutes in. Get this processed and hung on the website. Take good care. Swing trader students, you should be picking your symbols and preparing your trade frames. And we'll catch up with you in the chat room. Take good care.